What's up, everybody? This is Jimmy with Trading Decoded. It is October 15th, 2024, and it is 4:08 in the afternoon. The market is closed. Today, Qs and ADD, in the beginning of the day especially, which is my favorite time to trade, was going in opposite directions. This has been happening quite often lately. It makes things very uncomfortable. What we're really hoping for, if those things aren't moving together in the same direction, what you should be looking for is figuring out which one has more control over SPY. In this case, Qs ended up being the winner. And if you're ever curious to know which one is controlling SPY, just look at the two charts. Does the Qs chart match the SPY chart, or does the ADD chart match the SPY chart? If you find, and when you determine which one of those two entities has got more control over SPY, then that's the one you could be looking to line up your thought process with calls and puts and exits and entries and all that stuff. Okay, now I say that to say this. Patience is a virtue. It's one that I lack severely. However, today I practiced some patience. I waited for 4 minutes before I took my first trade. I did so because things looked good as far as resistances moving higher. We did open up right near all-time highs again, close to it. Not my favorite place to play, but however, I was willing to play calls if the justification to take them was there. They weren't there. In fact, we had very strong resistance on Qs and a very strong resistance on SPY, which after hitting it enough times said, hey guys, you know, ADD is starting, I think ADD starting to roll down yet or slow down? I don't remember what was going on. We'll look at it in a minute. But nonetheless, we had resistance. So if you're looking for puts, we were bouncing from that resistance down, sometimes a little lower, sometimes not so low. So it was a little bit uncomfortable. And as long as we stayed below that resistance, we did believe, especially if things started to rotate down, that we were more likely to come down from there. And then, well, it definitely went down from there. But I was already done trading by the time the good, clean, big moves happened, but that's okay. We got a bunch of people into some of those trades. But without further ado, let's go ahead and launch charts and take a look at what we were dealing with. So the resistance that I was speaking about I told everybody, I'm not interested in calls unless we can get a candle close above SPY's pre-market high right here. Okay. Now this here was a put scenario. However, when you look at ADD was pretty much on the way up. Qs were struggling to move lower. Okay. We wanted the Qs below pre-market high. Now they didn't close below pre-market high. They too didn't break above their pre-market high. Okay, so when I say pre-market high, I mean there's this pre-market high line that we had drawn. So there was two criteria for puts on SPY. Number one, we wanted to close below our pre-market high in conjunction with Qs being below the orange line, hoping that if those two things happened and lined up with each other, that Qs would at least make it down to their pre-market high line, which they did. The problem was it happened right on the opening candle for Qs, but SPY never closed below the put line. So puts looked good for a second. ADD kind of took that off the table. And so we waited. Now we didn't wait for very long, or at least I didn't, but we did recognize that we had a nice resistance here on Qs. We had a nice resistance here on SPY. So if you were going to do anything, let that be your entry and or stop loss, right? So as long as we stay below these levels, we'd hope that we can make it down to a support that you're willing to scalp or make some money on, or a small move down, whatever the case was. Then Q started to put in lower highs. So that was good. That's what kept us in this trade a little bit longer. Now, like an idiot, I had an alert set on the Qs at the pre-market midline, hoping that we would get there. We got there. That was an exit for a lot of people. Unfortunately, if you got in up here and you got out here on this futures line, still not a huge move. Couple of bucks you could have made in that. However, I also had an alert set down here on our blue pre-market low line on SPY. That's really where I was targeting from this entrance here. It got a little sketchy. It got a little sketchy because Qs ended up breaking high out of their downtrend. They temporarily broke above their pre-market high. Fortunately, it sold back off. And SPY stayed below this level. So we were talking about getting into puts up here during these candle wicks, okay? Very uncomfortable if you were still in it here. Several people got out here because it was a strong support. We didn't know it was going to be strong until it became a strong one. And fortunately, we were able to get to our ultimate target before 10 o'clock, which allowed us to get out of that trade. Now, from up here at 934 to out here at 959 ended up being about a 33% win, depending on when you got in, when you got out. It could have been 20% for some and a little bit more for others. Probably more than that if you got in at the pullback here and just played it down there. Certainly more comfortable. But with that said, that was my only trade of the day for me. Now, things started to look better to the put side. And what we were looking for is for lower highs to start to develop. We got below the put line. We stayed below the put line. We went from support. We pulled back to resistance. Now at 10:04, the Qs, I'll show you that DM in a minute. The Qs at 10:04 hadn't yet broken through their pre-market low line or the pre-market high line. We want to be below. Not only do we want lower highs on Qs, and if we do, we said if Qs get through this level of 497.74, I do believe because of the lower highs that we will break that and we will head down to our pre-market midline. Okay, that happened. That happened early, or I mean, it didn't happen till 10:08. So even though SPY was showing us that it wanted to come down at 10:04 off of lower highs, Qs didn't give it to us until 10:08. Now, I do have people in my community that do say, hey, lower highs are bad for calls, and I do anticipate support failing instead of holding. Some people get into this early because of the lower highs. So there's always an aggressive entry and there's always a conservative entry. The conservative entry would have been waiting for a candle close below this support level, looking for it to make it down to the next. Now, if we're in a downtrend, which in this point, lower highs typically and lower low means a downtrend, and we close below the next support, which happened here, we're aiming for the next support down. If we close below that support, we're aiming for the next support down, and so on and so forth, okay? If we close below a line of support and it closes back above that line, we want it to stay as resistance. It is wise, or that becomes your stop loss. You may stop out here. You may say, yeah, I got a double top here. I'll wait till we get there. Whatever the case was, we found entries for this because somebody was asking me, Jimmy, this thing's moving down. When should I be looking to get into puts? And I said, wait for Qs and wait for SPY to pull back to a line of resistance. 10:20 in the morning, Qs and SPY were pulling back to a level of resistance at the same time. During a downtrend, I don't know what ADD was doing at this point. Yes, ADD was, this was the one thing we talked about it too. I said, the only thing that makes me a little uneasy about this is that ADD hasn't yet rotated to the downside. But what I want to show you guys is, like I told you in the beginning of this video, look at your SPY chart, look at your Qs chart, look at your ADD chart. Does the ADD chart reflect the SPY chart better, or does the Qs chart reflect what the SPY chart looks like? This is what I mean. Which one has the controlling force over SPY for the day? Sometimes, and it's rare, ADD is the market mover. Most times it's Qs. That's why I put so much value in the Qs, okay? You have to pay attention to the Qs. They can tell you a lot of important things, and one of which was huge for the late day trade that I didn't take, but I stayed here all day and we were able to find some people a nice winning trade late in the day. However, the pullback that we talked about happened right here. No clue. I had no clue we were going to make a move this big to the downside. No idea. I just know that, hey, we're pulling back to in a downtrend to resistance on both charts. We're hoping because of the lower high that support is likely to fail, not hold. If it does, let's aim for the next line down. If we close below that, the next line down. If we close below that, the next line down. If you close below that, well, the next line down. It just works often enough to make money with. So yes, I didn't take part of this massive trade to the downside, and each one of these was where Qs was potentially hitting lines of support. Now, I was begging Steven, if you know, you know, for us to get through this level of support on the Qs and head down to the pink line. that happened, and it happened aggressively after that. It kept falling out of the sky on the Qs, ultimately making it down to a target we had all the way down here, which was at 1040. So if you were getting out, because we hit any one of these, guys, we don't know which one's going to hold, which one's going to not. So as you move down, just simply move your stops down, trail your stops, trail your wins, catch moves like this. This is a massive trade to the downside, and we found it before it happened. Okay? Now, as we get down to the bottom, you take your profits somewhere along the line. Okay? Ultimately, we pull back. Now, here's a resistance. Here's something people still dying to get into puts because they didn't catch any of this on the way down. Understandable. FOMO's real. Jimmy, where should I consider buying puts? I said, well, wait for Qs and SPYs to pull back to a resistance at the same time. So at 1042, SPY is near a resistance level. Okay, this is resistance. What was Qs doing at 1042? Qs were near a resistance level also. So great. This is resistance here. It's not the line, but it's resistance. If you are interested in buying puts there, especially if ADD is printing red, and at the time it still looked like it looked like it could still be in a downtrend, although it was printing green at that point, what you have to be aware of. I tell people all the time, we don't know if this is going to be the start of a continuation down or the start of a reversal. You'll never be able to know that. It's impossible because nobody that I know of can see the future. So you have to trust the chart. We're aggressively moving down. We're aware that it's not going to last forever, but we're pulling back during a downtrend, which is a standard thing to happen. We're just going to trust that the sellers that stopped the buyers last time from going higher are going to stop them again. So if you buy your puts here, there's nothing wrong with that. What you'd be aiming for is your puts here, hoping to make it right back down to the support we just came from. But here's the caveat. Here's the thing. Recognize quickly, like I did, not in this trade, but I called it out as soon as this candle finished printing. I said, guys, this could be a potential higher low. If you're in puts, you might want to stop yourself out before it turns into a losing trade, or break even, or keep the loss small, or take what little profits you may have depending on when you got in. Higher lows are bad for puts, period. So no, I'm not looking for puts if we pull back again because of this higher low. If I'm in puts, I'm getting out of them because of this higher low. Am I going to jump into calls? Not necessarily, but knowing where, if we close above that resistance, where's your next resistance up? Probably somewhere up in here, split candle, yellow line if you want, futures line if you want. We're going there. That's the next level high. Okay? Does it continue through there? I don't know. Would I have bought puts here? No. Why? Because higher lows are bad for puts. What's the criteria for me to get back into puts if I'm interested in puts? Well, for one, let's get a close below a trend line. Number two, let's get below support first. Well, guess what? We never got below support until here. And then once we did, we moved back down to the support below it. Okay? You guys got to look for this stuff. Trust the chart, not what you want. It's easy to feel like puts in a move like this is going to continue all day. In this case, it was a momentary lapse of continuation. It ultimately ended up going lower today, but you can't assume that any move is going to last all day long. It does sometimes, but it's rare. Many times we've seen a drop like this and then a very steep recovery shortly thereafter, okay? So just remember, lower highs are bad for calls, higher lows are bad for puts, okay? Now there was nothing here to look at unless you were trading from resistance to support. But again, if you noticed a lower high and you were in calls, you have to take yourself out. Yes, we moved back down to support. Support did hold. So yes, if you would have held your calls, you would have been red. You would have been hoping that it continues up and yada, yada, yada. So yes, it works out sometimes if you hold long enough. But spotting these things before they turn into very uncomfortable losing trades is really important in my opinion. And if you're not in any trades, and let's say you have a put bias, you could say, but Jimmy, When should I buy puts? Wait for lower highs. Now this, and it didn't work out this time. I tell you guys all the time, not this setup doesn't work every time. When you're coming off lower highs and you're breaking or you're coming down to support, okay, usually this move tends to break down through support, not out through resistance. This is one of the rare occasions that it didn't work out that way. Now, we weren't looking for puts down here. We weren't looking for calls either. At least I wasn't, okay? But I do want to show you guys something out here a little bit in the future, because shortly after 12 o'clock, I did, I got to turn this yellow since we touched it. I did go to lunch, okay? So I wasn't here from 12 to 1, somewhere around here. When I came back, okay, yes, we were pushing lower. We finally got down to yesterday's low of day, which was the pink line is the stink line on SPY. I had a member who I blocked out his name because I'm not trying to embarrass him, but I want you guys to realize a couple of things. Price action is king, okay? Now, if you are swing trading or trading longer term expirations, which I do not do and I don't teach, okay? That's why this conversation matters. I don't care about a 15-minute chart. At best, and I don't do it, I don't care about a 5-minute chart. Anything above a 1-minute chart for me is useless. Now, if your style of trading involves higher time frames, by all means, understand what we're doing here, okay? Now, here's what's important, and this is why I want to share this brief commentary with you guys, okay? This is from today in our Discord. I was telling people this whole time, I said, guys, if the Qs can manage to get a close below 490.76, which is this orange line right here, the move is likely to be sizable to the downside. Now, I said that somewhere over here. And I said, I wouldn't buy puts until that point if I was looking to continue to trade. Now, let me give you some context here. We got briefly through that line once. We came down, we touched it again, violently reacted the first time, violently reacted the second time, violently reacted the third time, fourth time, until we closed below it. Now, this gentleman was asking, Jimmy, what makes you think it'll go lower? I see a bottom. Rightfully so. I saw a bottom too, was 490.76. So I tried to explain to him, I said, what about it is making you want to buy calls? I said, everything is trending down. ADD is trending down. SPY is trending down. Qs are trending down. There's nothing saying calls. 16, 15-minute candles are holding support. I said, if you would have bought at any time in the last 15 minutes, you'd be down on your calls. The 15-minute chart has no place here, in my opinion. With the way I'm trying to teach people how to trade, right? If you're day trading, trade for the day. If you're a swing trader, 15-minute charts matter. Okay? I said, man, lower highs, we're usually looking for this support to fail. And I got to tell you, because of how strong of a buyer's level it is, if we close below that, we are going to get a decent move down. Okay? That was my thought. And I wasn't going to argue with the guy. I wasn't going to say, hey, man, in fact, I told him, you trade your plan, but I won't be able to sleep tonight if I don't at least warn people that, in my opinion, is a very bad idea. There was nothing in the market today, especially this late in the day, that was screaming calls. Nothing. Okay? So he goes on to say 491-ish is holding as support on the Qs before noon, right? That's fine. Meanwhile, we're well below that at 256. So there's no argument to be had there. Way too late in the day for 0DT. I agree. He trades Friday's contracts and he'll switch to next week. Friday on Wednesday works for me. I don't know. Whatever the case is, the majority of the people in my community are trading same day expirations, and they're trading day trading, not weekly trading, not swing trading, not investing. We're day trading. This setup right here, lower highs, putting more and more pressure on a strong buyer's level, Again, let's talk about this. What made that level so strong? If you said a lot of buying, you'd be correct. There's nothing wrong with that. It's why I would have waited for a candle close below that level before I jump into puts, because there is a lot of buying there. But since we know there's a lot of buyers there, what is the first thing that's going to happen to those people in their positions when we close below that line? Well, they just went red on their trade. If they're holding shares, if they're trading options, they were red anyway at that point, but whatever. The point is, it's a strong buyer level. If we close below it and they want to close out of their positions, they got to sell. Selling is going to push the market lower. So this is my concern. If you're looking at buying calls off a very strong support level, I can see that. But if you're doing so while everything else in the market is pointing down, I think that's stupid. I think it's silly, and I would have had egg all over my face if this thing did the exact opposite. And you know what? To the gentleman, you know who you are if you watch my videos. If I would have been wrong, I would have been the first one to congratulate you and tried to learn from what you were looking at. I would have actively tried to learn something from me being wrong and you being right. Okay? But it would be remiss of me not to preach the same thing I do every day, which is lower highs are bad for calls. Oh, but Jimmy, we put in lower highs here, and each time we touched it, we bounced off of it. That's fine. So I missed calls at a time I wouldn't have been comfortable playing them anyway. The market was red. The charts were red. ADD was red. Printing down. Everything was moving down. I don't like calls in that situation, period. Yes, if we hit that and you bought calls every time, you would have won 1, 2, 3, debatably 4. You would have lost on 5, and you certainly would have lost if you tried at number 6. The question is, would this massive drop of over $1 in 8 minutes cost you all the profit you made trading calls in a downtrending day? I don't know. Emotions get involved for sure. Okay, so who knows what you would have done? You might have held. Maybe you would have held, then it would have been a smaller loss by the end of the day. I don't know. Point is, we knew that if we got below this, it was likely to be, I don't want to say no, it was likely to be a decent move to the downside. Our next target low was here. We got through that pretty quickly. Then the next one was all the way down here. Okay, now we probably should have had a halfway point in here, which would have been somewhere probably around here. You probably would have got out on this candle if you're using a halfway candle. But nonetheless, guys, entry point was here because the Qs closed below that very, very solid buyer's line, pushed us down. That's a quick $+ move in 8-9 minutes. That's a beautiful trade. That's a huge return late in the day. Again, not my forte. This is when the Qs made it down to their support. This pullback would have taken away a lot of that profit if you held through it. You would have gotten most of it back at this point because of the rate at which we dropped to get back down here. Not me. I wouldn't have held that trade that long. I wouldn't have been in this trade in the first place anyway. But the point is, guys, don't look at things that don't matter to day trading. You're going to give yourself analysis paralysis, or in some instances, you might get yourself to believe something that is less likely statistically to work out. Lower highs are bad for calls. Statistically, has a much higher success rate, meaning don't buy calls off of lower highs because you will more often lose on that trade than you will win. If you want to play calls, please wait for the downtrend to break and then look for a resistance level to break afterwards so that you can get the momentum from selling back somewhat onto the buyer side. Until then, you're a salmon swimming upstream, and that doesn't work well in the stock market usually because we are powerless to this thing that we call the stock market. We are meaningless. Our money, it doesn't even remotely show up on a radar. I don't care how big of a position you're trading, unless you're a multi-millionaire trying to trade thousands of contracts or thousands, tens of thousands of shares at a time, you do not exist to the stock market. Okay? So please, go with the market, not against it. it can save you a lot of stress, a lot of losses, and you will feel more comfortable in these trades. Okay? So with that, we're going to wrap it up. I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. Come on in, say hello, use your free week. No sign up of any kind at this point. To get that free week, you just show up. Now, come January, that's going to change. You will have to go register, no credit cards or anything, to get your free access, but you'll also have to verify your email address. So trying to keep the scammers down. The only way I can do that is to shut the door on the community, and you'll have to come through one door to get in, which is going through the WAP platform. Again, you will request your free access. You'll get the ability to do so. You'll show up. If you don't have temporary patron access, you will not be able to access our Discord, or if you're not a paying member. Okay, I hate to do that, but at this point, I've got enough people that have gotten scammed that I've paid for out of my own pocket. I don't want to do that anymore. Okay, I feel bad, but you guys, the only way I could fix the problem or put a curb to some of it is by closing the community to the open public. All right. With that said, I hope you all had a fantastic day today. I hope you practiced some patience, and if you did, you got to take part of some much bigger moves today. And that's it. So till tomorrow, guys. I love you.